Nigeria's foreign reserves have reached an over 8-month low of below $42 billion. Economic analysts are divided on reasons for this decline, but say the country has to take alternative revenue generation sources more seriously. Lara Folayo has details.
Nigeria's foreign reserves are presently below $42 billion, their lowest level in more than 8 months. The reserves inched up to a $47.8 billion high in May before plunging to its present figure of $42 billion in October, its lowest level since February this year.
It's quite disturbing. Disturbing in the sense that the pace appears to be, too fast in the last few months.
There has been a major economic squeeze on the emerging markets. Nigeria appears to be, or happens to be, one of the emerging markets. Economic squeeze because a lot of foreign portfolio investors are pulling out their funds from Nigeria and going to some other markets that are more profitable.
The Central Bank of Nigeria blames this decline on capital flow reversals attributable to higher yields in the United States, and some economic watchers agree.
That's very true because of the higher yields in the US. Wherever you put your investment and it gives you more return, that's where you put in your capital. So that's the reason why people are making withdrawals from whatever investment they have made, which makes part of the foreign reserve, and putting it in markets where they can get higher yields for their investment.
The first is of course, global developments, if you like, factors over which the central bank may have little control. Interest rates are going up in the US, yields are going up, and so investors are exiting Nigeria to the United States.
But this analyst sees things differently.
I think it is a bit preposterous for the central bank, and not only the central bank, a lot of the pundits that you will hear, that will quickly explain out our underperformance and, to what's going on internationally. Nigeria into the global economy. As a matter of fact, when we have foreign portfolio investors playing in our economy, maybe in our bond market or in our stock market and so on, the kind of monies that they are playing with is really very insignificant compared to the kind of money that they have at their disposal. However, with a little bit of money, they can actually shake the Nigerian economy. And we know that foreign portfolio investors, they play with what they call hot money. And they don't need any much excuse before they move out of the economy en masse. So now the tie between Nigeria, the Nigerian economy, and the US economy is really is not very strong as much as to make it a major issue.
Political uncertainty is also blamed for declining reserves, as investor confidence is now on the downside.
The fact that investors' confidence low, partly on account of the political uncertainty. One more point that I must also emphasize that has also led to the drop in reserves is it does appear that we have stepped up purchases of forex. Politicians are buying dollars to do politics.
In any election cycle in the world, investors are usually scared. So the first thing they do is to pull out their investment.
The Naira continues to remain relatively stable against the greenback, a trend attributable to the fall in foreign reserves which have helped stabilize the Naira. A recent currency swap deal with China has yet to yield much results in strengthening the local currency. There are speculations that the reserves moving below $40 billion will be a source of concern to the Apex Bank. The Central Bank of Nigeria says the foreign reserves at $42 billion can fund 17 to 20 months of imports. But the country has been advised to find stopgap measures that will ease the pressure on the dollar, promote investments while ensuring capital votes are adequately implemented for better infrastructure that will push up revenue earnings.
Right now, we're in that free-for-all. The economy is broken. If we want to get this thing working, you have to do the extraordinary. You have to lock down the economy. And then you have to focus the people on 5 things and focus the economy on 5 things. Number 1, the fact that, if we can feed ourselves, if we can secure ourselves, if we can clothe ourselves, if we can tidy up our environment, if we can house ourselves, if we can secure those basic Maslowian needs, which is what they call the hygiene factors, right? Food, shelter, clothing, security, okay? If we can secure that and begin to see how we can produce this for ourselves, and with style, you lock the economy in a bit, but you still play the WTO game. You don't tell them that you're going to lock down the economy, but you incentivize those who can do these things here. And so you now focus the people on the behavioral change issues to say, guys, at the end of the day, these are the things that matter.
We need to look at another foreign denominated bond to sell. If we have another sale of bond denominated in foreign currencies, then we should be able to have a boost in our foreign reserves now. But if we rely only on oil revenue right now, we are going to be expecting a constant drop in the foreign reserve, which is not so good for the economy.
One way is to ensure that we strengthen our SMEs, because the SME is a backbone of every economy.
The analysts believe these efforts will allow Nigeria to have stronger foreign reserves. They expect this to have multiplier effects, including the country being able to better meet international payment obligations, as well as having enhanced creditworthiness and buffers against external shocks. Lara Folayo, TVC News, Abuja.